Fed Chair Janet Yellen is back on Capitol Hill today. She'll be testifying before the Senate Banking Committee with her monetary policy report to Congress. And Senator Heidi Heitkamp joins us now. She's a member of the Banking Committee. Senator, it's good to see you.
It's good to see you.
I think you were one of our states that's good for business. One of the things in your notes, and I want to ask you this because it causes quite a bit of discussion on both sides of the political spectrum, and that is one of the things you want to know from Janet Yellen is what she's doing to try to help the people that need help the most, and the income disparity, et cetera. And I would think, and most Democrats figure just do more of what she's been doing to help them, where there's a lot of people now saying that QE itself has caused the income disparity by blowing up asset prices for the people that own the assets. What's the right balance here on trying to help the people that need help?
Well, I think the most important thing the Fed chairman can do is provide predictability, is to stay the course, not respond to political winds. That's why we have a Fed. And I think she's been just expert at that. And I think she's sending her concern by her first speech being with the Redevelopment Corporation in Chicago. And so I think she's trying to say, yes, we're concerned, yes, we're listening, but monetary policy is a key factor. It needs to be predictable. We're going to stay the course. We're not going to respond to political winds.
Okay, but that's you're not answering. Then you think there are people that say that QE and everything that the Fed has done has caused the income inequality, or at least has made it worse. What you're saying right now is you want them to continue being very accommodative, as if that's going to actually help the people that at this point, savers have not been helped by low interest rates. It's the people that are already at the high end. They're doing great. We hear it all the time from hedge fund guys and billionaires. They're doing great with QE. But not everyone is.
Well, there was a need after 2008 to bring capital into the economy. I think we're ways away from 2008. QE was one of the strategies because lowering interest rates, quite frankly, wasn't as stimulative as what everyone thought.
It's 2014, Senator. I mean, 2008. That's what people say, that during emergency times is one thing, but it's 6 years later.
Well, you know, she's already signaled somewhat of a retreat from QE. We were looking at taking some steps backwards, but not a jump backwards. And that's the most important part, which is this gradual, not overreaction to political winds, but making sure that we are doing things in such a way that we don't shake up the markets, we don't shake up the capital markets, and that we're actually easing into the retreat on QE and potentially, eventually raising interest rates.
But people would say the political wins with the Democratic president and with the Senate at risk in 2014, the political wins are to keep the spigots open. So she is responding by not getting out. What you're saying right now, you're saying you don't want her to respond to the political wins. The political wins are for her to keep both barrels blazing with more QE to help the economy, to help people that are running in 2014. So which political wins are you talking about that she has to resist?
Well, what I'm saying is that she doesn't pay attention to the politics. What she's trying to do is to meet the needs of the American people, doing the two things she's responsible for doing, which is reducing unemployment and taking control of prices. And so to simply say she's reacting to political winds or trying to benefit one political party or the other, I think is way too simplistic. It ignores the history of this woman, and it ignores the history of the Fed the last 6 years.
I would certainly concur with that. And I think the biggest thing that the Fed can do now for Main Street is not to listen to the siren call of Wall Street that somehow increasing wages are a bad thing and are a sign that we're going to have an incipient inflationary problem. I think that Janet has articulated a viewpoint that increases in real wages, an increase in the return to labor would be a welcome thing. So I think the most important thing, I think she will communicate it today, is that an increase in wages is not a problem to be solved, but a solution to a problem that we already have.
One of the things that I've talked to the Fed chairwoman about consistently is persistent unemployment, wage gap, and skill gap, and what we can do on our side of the aisle in the Congress to address these concerns. I think a lot of the things that we're talking about here, we throw on the Fed when we have to do the things that we need to do here, whether it's passing the Export-Import Bank reauthorizing, which I've been fighting for, whether it is taking care of tax reform. We've got a highway trust fund that's going to go broke in August, and we're doing nothing or talking
Senator,
about it. Nothing.
While we have you here, we've had you on many times, and there's one time you warned President Obama about not delaying Keystone. That was back in September of 2013. Gosh darn it, it has been delayed, now past the election. Are you just furious, or, I mean, have you aired your concerns about this recently, or?
Oh, I certainly have, and I think it goes back to what I've talked about on this show, which is everybody talks about the fuel source, whether it's fossil fuels or renewables, but what I'm mostly concerned about is transportation of energy, whether it's building up our power grid or whether it's providing pipelines. Now we've got a whole issue as it relates to moving crude on the rail.
More dangerous.
We've got to figure out how we're going to move our energy if we're going to continue this energy renaissance, and Keystone is a huge part of that.
You got to walk a fine line there, Senator, and you know, you're in one of those red states, and yeah, I think you do it pretty well. But anyway, we appreciate your time today. Thank you.
Thank you so much.
Okay, we'll see you later.